This is another episode of me documenting the day-to-day process that I'm taking to achieve long-term consistency in the financial market. And this is another day where I did nothing, being extremely selective, being extremely patient, and extremely disciplined with the trade that I'm taking, really considering if that trade is worth putting risk on. And in my opinion, nothing was worth putting risk on today because the condition was not optimal and price was not delivering as I was anticipating. It ended up doing what I anticipated it to do, but only later in the morning session after 11 o'clock, and I don't trade after 11 o'clock, and I had a doctor's appointment to get to, so I was gone. I was in and out pretty fast, ended up doing nothing. So instead of this being a trade recap or kind of a session recap, I'm just going to break down what my bias was going into the day and why. And maybe you can critique me, maybe you can give me a few pointers, maybe you can learn a thing or two. Let's just do it. Now, yesterday I didn't take a trade at all either because I came to the market with two ideas, looking to be a buyer and a seller at the same time. And when that happens, what does it lead to intraday? Indecision. So I can't confidently execute on either idea and end up doing nothing, walking away with nothing. So this entire week, one trade, that's it. But guess what? It's still a week where I'm closing up. Less is more. I don't have to trade every single day. I'm getting used to trading to this all-time high condition. I'm getting better at it, that's for sure. Instead of just looking to fade the market as I was every single day last week, now I'm actually trading in line with the daily chart. So that's good. So, top-down analysis, I'm going to walk you through what I was thinking going into the day and why, all the logic behind it based on the way that I trade. So, view my day. Today's Friday, September 19th, 2025. And I'm going to read my market approach today first, and then I'll walk you through the logic. So how I felt going today, I was confident in my read on price, and I framed a good bias, and it delivered just outside of the trading window that I trade. So what is the draw on liquidity? Draw on liquidity meaning what level am I expecting the market to reach for? I was thinking previous daily high, or at least consequent encroachment, which is simply the midpoint of Thursday's premium wick for a low-hanging fruit objective, because I'm not so certain this will make a higher high on the week. What is my bias? Higher time frame narrative, market criteria, that is going to make my bias for the day. Combining the two, putting those two pieces together, and I get a good idea of how that daily candle is likely to paint. Because if the daily chart is bullish, I'm probably going to be looking for higher prices. Then I want to look for market criteria to confirm that the daily profile is likely to deliver higher prices. So this weekly range has done a lot, with price still sitting at all-time highs. I am thinking price will sit above Tuesday daily high and settle on the weekly range. In other words, this is probably going to be a small range candle. Market criteria. I like how price has dropped down in the overnight session and made an impulse swing back inside the range. Looking back in the previous daily range, there is a lot of overlap on the 4-hour and solid wicks on the 1-hour that should support price. I also like how price is consolidating on the 4-hour, indicating it's comfortable where it's at. What I am noting is how price is opening high on the day with smooth sell side below. So how is it going to get to the draw on liquidity? This is the third thing I want to ask myself, basically just blending higher time frame narrative and market criteria together. Now I have to ask myself, how do I think it's going to get to the level that I'm thinking it's going to reach for? And I said I would like to see price open high on the day, but drop to rebalance the impulse swing / purge low resistance sell side, then create the real move of the day. And exactly this happened, but not in the trading hours that I trade. So what setup am I looking for? Bullish premium gap opening. That's what the acronym stands for. And I'm only looking to be a buyer as the market drops lower today. So only looking for longs. I want to see price open high on the day, drop down to repulse the impulse swing made overnight in pre-market, purge, remove low resistance sell side, then create the real move of the day. Now we can do a top-down analysis. So going into today, starting on the weekly time frame, I'm looking at the weekly candle. This is what I do, top-down, every single trading day. And obviously it did not look like this because this is where we settled, but going into 9:30, maybe I can replay it. Let's see. Nah, just whatever. But going into the day, this was basically a full body up close candle. So it's Friday. This weekly range has done a lot. We have a really strong up close candle. So I'm thinking either this is going to be a small range day and this candle is going to settle near its high on the weekly range, or we're going to make a higher high going into the weekend. So I wasn't really certain which one would happen, which is why I set the low hanging fruit objective in my pre-market approach. But dropping down to the daily, we can really see what the market has done so far this week. We had an FOMC on Wednesday, right? And on FOMC, the market drops down into this daily discount array for keeping up with ICT's lectures. He mentioned this right here, right? So I just have that annotated. I know that price dropped down into it, but closed above this buy side imbalance, sell side inefficiency, or bullish fair value gap. So if the market opened here, it dropped, traded down on FOMC, which was manipulation. We traded lower first, which is exactly what you want to see if the higher time frame narrative is bullish. On major news events, on high impact news events, you want to see the market trade lower first, which is manipulation, then trade higher. Trade in the opposite direction first to create manipulation, then look to be a buyer. In this case, we have that on FOMC. It trades down, drops into the daily volume imbalance, but it closed. Where did we close on that daily candle? Above this daily gap right here. So that is a sure sign of strength if the market closes above it. And the following candle is a large up close candle Thursday. So going into today, I'm wondering if we're going to make a higher high on the week, or if today is going to be a small range day and just settle near the high on that weekly range. So next thing I do is I mark out, not that. I mark out previous day high and previous day low. I annotated this morning Tuesday daily high because I thought we could potentially trade down into that and see discount sensitivity around that. We never traded down to it, so that's insignificant. But dropping down to the 4 hour, I'll mention what I stated in my pre-market plan. First of all, let me get all these down to the lower time frame. All right, now we have everything on the 4 hour. So there's the reaction out of the daily volume imbalance. FOMC trades down first. Even on the 4 hour, we can see that price is closing. Let me add this real quick. We can see that price is closing above the midpoint of that daily buy side imbalance, sell side efficiency, even on the 4 hour. So that's a sure sign of strength. Obviously, the market has reacted out of this gap. So what do we want to see from there? Well, we see that we have this larger discount wick here. We have this premium wick here. So instead of the market leaving a gap here, it has basically closed that in, and we have to see a lot of overlap on the 4 hour time frame right here. So I'm thinking this area and price is efficiently delivered. I'm not thinking it's going to breach this overlap that we have right here. And I mentioned that in the pre-market plan. So looking back in the previous daily range, there's a lot of overlap in the 4 hour and solid wicks on the 1 hour that should support price. This is the overlap that I'm talking about. How we overlapped this strong up candle here, left this large discount wick. We can even put gradient levels on that, or quadrants, because we treat wicks as inefficiencies. And we can see that the market fails to trade to the midpoint. If it fails to trade to the midpoint, that's a sure sign of strength. Another thing indicating higher prices on the 4 hour time frame, we can see that all the bodies of these candles basically close kind of in a similar range. So that tells me the market is consolidating. It's comfortable where it's at. It's not interested in going lower. The same can be said for the downside. I'm back testing a lot right now, and this market does this exact same thing when we go lower. Look right here, we see the same kind of thing, right? Consolidation where the bodies of candles close in the same range. This tells me the market's comfortable where it's at. It's not interested in going lower. So then eventually later in the session, we have a 4 hour immediate rebalance. I can annotate that after the fact. This is not what I was looking for pre-market. I'll show you what I was looking for pre-market real quick. Okay, so basically on the 15-minute, we've delivered Asia high, so I'm expecting a drop to rebalance the impulse swing, knock out trailed longs, entice shorts, and offer fair value for smart money longs. So I would like price to rebalance the impulse swing, clear out low resistance sell side, and offer a discount where it is fair value for me to be a buyer. These gaps are still being respected, so I don't believe anything has changed yet. That's the 1 hour. And on the 4 hour, you can see that I'm noting the overlap here, which should be met with resistance going lower and a hold price up. So how the bodies stay within a range tells me price is comfortable where it's at. So everything that I'm saying right now is literally just everything that I was looking at going into the market to form a pre-market approach. I'm just walking you through that logic right now. You can see that I have everything annotated before the market opened at 9:30, and that actually ended up delivering today. So whenever I have a day like today, kind of makes you feel good, right? Builds confidence in your ability to read price and your ability to frame bias looking forward into the future, which removes indecision. Because as you get the repetition of doing this thing, this same process day in, day out, day in, day out, day in, day out, you begin to get more and more confident with your ability to frame a solid market approach and follow through with that plan. Earlier, before I would do anything, any kind of recording of my pre-market approach, these are things that I used to not do before June. June is when I started doing this. June is when I actually started taking this seriously and recording my pre-market approach each and every single trading day so I could go back at the end of the trading session and know exactly what I was looking for and why. And if I got it wrong, I'm able to learn from it. And if I got it right, I'm able to grow for that as well. In this case, I got it right. So I'm just walking you through the logic. But it's extremely important that you do this as a part of your process so you get good, you build the reps, and you build the experience of framing a market approach and following through with that plan. This is crucial. This is essential. And this is the only reason why I'm able to get good at a market approach. This is the only reason why I can say the market should probably do this today, and it actually ends up playing out. So on the 4 hour, like I said, body saying the consolidation, overlapping these wicks, this should be met with resistance going lower. If we go to the 1 hour, note the respect of that 4 hour wick on the 1 hour. You see where the body stops on that candle right there, right at it? That tells me that the algorithm is using that level. That's it. Now, if we look at these two down candles, I know that this is a high probability change in the state of delivery when I'm looking at it pre-market, because it removes liquidity from the marketplace. So you can see that this consecutive series of down close candles has gone below this low and this low. So it takes sell side liquidity out of the marketplace. We violate the open price of that consecutive series of down close candles. That's a change in the state of delivery. And now on the development of this daily range, we can see that we have dropped down in the London session when the daily chart is bullish, which is exactly what you want to see. So this is my protraction buy playbook, or bullish premium gap opening, where we have a gap up opening from where we settled yesterday in regular trading hours. Market fails to close that gap, and then we continue trading higher. So I know this is a high probability order block. You can see I have that annotated in my pre-market plan, right? Before the market ever gets down there. On the 15 minute, is there anything else to mention from the hourly? I don't believe so. Note this separation right here. That's a new day opening gap. So if I go to my new day opening gap layout, I can easily just copy and paste this right here. Boom, there you go. Adjust the visibility if need be. And that's it. So keep a separate layout for your new day opening gaps and new week opening gaps. Keep things nice and organized and efficient. But note how, let me hide this on the hourly. Note how we have this strong consecutive run up right here, right? So the market has run up a lot without taking any kind of sell side. We have no major run on sell side that we see in this impulse swing. Like, notice how this drops down and removes this low and this low. We can see that. We can see that the damage done. It's clear. It's there. It's obvious. As the market's rallying up here, we see no kind of run on sell side liquidity seen on the hourly time frame. So nothing of significance, nothing that's pertinent. So this tells you that this is low resistance sell side liquidity. You can see how all the lows are kind of stacking up in here, right? And they don't take, each candle does not take the previous candle's low. So when the market makes this impulse swing, what I want to see is it clear out the low resistance sell side liquidity here, rebalance the impulse swing that we've made in the overnight session, and then trade higher. So on the 15-minute time frame, now we can really see that low resistance sell side, right? Like this. So next thing I do on the 15-minute time frame is I'm going to annotate the gap opening. This is where we settled yesterday. Notice how I toggled on regular trading hours. So regular trading hours is simply where the market closes at 4:14 p.m. Eastern Standard Time to mark the end of regular trading hours, and then where we open the following day at 9:30 Eastern Standard Time, the 9:30 open. This is where we settled yesterday, and then we had a gap up opening. Notice how the market gapped up from where we closed yesterday in regular trading hours. So that's your opening range gap. And if I'm bullish, I want to see the market keep that gap open. I want to see it fail to close that gap. And I can logically assume that the market is going to fail to close this gap and continue in the direction of the daily time frame, because the daily time frame is bullish and the market is at all-time highs, right? Mix that with market criteria, noting how we have protraction in the London session. It's very likely that we've made the low of day in the London session, right in the heart of London session, where the market dropped down, clears Asia lows, I'm gonna take this. So now we've done damage in the London session, dropped down. When the market is bullish, that's exactly what you want to see. Impulse swing back inside the range. So now I want to see the market open high on the day, drop lower first, rebalance the impulse swing made from the overnight and pre-market session, offer a discount where it is fair value to be a buyer, clear longs, clear trailed stops, and look to buy it. So if I frame the range, I'm just going to frame from this low to this high, that of pre-market. If I frame that range, we're going to see that the move only comes once the market offers fair value on that range, right? So initially the market trades up, takes previous day high, and then we drop lower, and then we rebalance the impulse swing made from overnight and pre-market, and then we see the real move of the day. And where does the move happen at? It happens at the high probability order block from the hourly time frame, and as well as the new day opening gap. So what I was looking for in my pre-market plan, like I said, was I wanted to see the market clear out low resistance sell side, right? I want to see a drop to rebalance the impulse swing, knockout trail longs, entice shorts, offer fair value for smart money longs. Now what I was looking for and why I missed this move, I guess at this point we can go into kind of like the session recap. If I pull up the recording, I'll mention a few things that price did that I did not like, which made me doubt the long in the morning session. So note how I have this magnet annotated here. That's where I want to see the market draw down to first. Ideally, it would have just dropped down first, right? And this price leg right here, ideally it just would have dropped, cleared the pre-market sell side, delivered the new day opening gap, and that's where I was looking for a reversal. That's why I have this little magnet annotated, and this is at 939. So at this point in time, I don't like how the market has left these highs relatively equal and these lows relatively equal. So I'm thinking there's unfinished business on both sides of the range. So now I'm just waiting for price to take one side of the range, and I know it's likely to go for the other side of the range next. So what we do is we trade up, we clear the relatively equal highs first, we deliver previous daily high. Now I'm thinking the market's probably going to break lower for these relative equal lows, but I'm bullish on the day. So it's difficult for me to sell short if I approach the market with a bullish bias, and I have a rule that says never switch bias intraday. So now you can see I'm framing premium arrays, and I'm thinking about selling this thing short. I'm just waiting for more confirmation, but the market falls into this consolidation, this really slow, high resistance price action, and I'm not interested in doing anything. So at this point in time, this is where I basically just check out and I close off. So I was really going back and forth between whether I should buy this gap or sell this change in the state delivery. Watching the reaction here. So I was indecisive. When I'm indecisive about what the market is going to do, I don't know if it's going to go higher. I don't know if it's going to go lower. That always leads to my worst trades. So I almost took a really, really low probability long. Right? You can see that I was watching the market as it drove below this candle's low, and then we overlapped this sell side imbalance buy side efficiency. I was viewing that as inversion fair value gap. I almost bought that, but knew that this was not worth putting risk on because number one, I was extremely indecisive about the direction of price, and number two, the condition was extremely slow. So it was not worth putting risk on for me, and I let it go. So that's what I did good today. I go to the live trading notes. So I want to buy the obvious gap light across the initial high. That's the gap that I was looking to buy. But I couldn't buy it because then we buy in the high a day. And basically what I did right today was I brought awareness to high resistance liquidity run conditions and sat out of it, preventing loss. I brought awareness to the location, obvious 1 minute fair value gap, and I almost bought and prevented a loss, which is what I just walked you through. So I almost bought this gap, but noted that it was at the high day. And every time I buy the market at the high day, it never works. So I'm not going to do it. And I almost bought the market, but felt anxiety surrounding the idea because I know this is not a day worth putting risk behind and preventing loss. So all in all, there was a lot of mistakes that I could have made today, and I prevented all of them. So I'm getting really good in my ability to prevent myself from making mistakes and minimize drawdown. The best move today for me was doing nothing, and I did nothing. So that was the right move for today. Then we can see that later in the morning session. There's your quick session recap. When the market does deliver the new day opening gap, we have an inversion fair value gap, and it offers the long right there. Boom. So I don't trade past 11, so I would not have caught this move regardless. I would be out seeing the market do this back and forth. Tuned out of the session very early, which was the best thing for me to do. Although I missed this, I don't care because it'll show up again in the exact same fashion. So I was looking for the market to rebalance that impulse swing. And only once it did that, then did we see a move higher. So my bias was correct in hindsight after the fact, but did not deliver within the time window that I'm looking to trade, which is fine. So that's going to be a walkthrough, top-down analysis, why I arrived at a bullish bias today, and what I was looking for, and why, and how that delivered. If you like this kind of video where I'm just breaking down price, top-down analysis, let me know. This is more of like a chart review, I guess you could say, instead of like a session recap. But this fits within the criteria of my bullish premium gap opening setup. So I'm just working on that. That's all I'm working on right now. I'm doing a shit ton of backtesting right now. You wouldn't believe it. It's literally all I'm doing all day, every day. This is the optimal intraday swing model study system version 3. And I'm getting really comfortable with my playbooks, because you can see that it's the same thing happening over and over and over again. If you look at all the tags, it's the same things repeating, right? So the experience factor with my playbooks is building. It's there. And as I continue to backtest them over and over and over again, I get more comfortable with them and I get better at reading price. So one thing that I'm kind of learning right now is the importance of higher time frame analysis. Before, got to pull up the Miro board, got to pull it up. Before, this is how I was kind of arriving at a higher time frame approach, right? All these different things, but now I'm just doing an actual technical analysis on the daily time frame and annotating the PD arrays from the daily time frame, and it's telling me how I should expect that daily range to paint. But all the backtesting that I'm doing right now is literally in hindsight, and I'm just going top down, framing that idea in hindsight after the fact, and annotating and explaining to myself within the form of my annotations of whatever I think is important, why that move delivered. So you can see the difference between, this is actually something I haven't looked at, but I bet you can see the difference between my annotations. Let me pull up literally the exact same day. So let's go to August 13th, 2025 on here. And let's go to August 13th, 2025 on here. So you can see that right away from the weekly and from the daily, I have annotations, a lot of annotations at PD arrays. Now if we go to this is version 2. I have nothing annotated on the daily or the weekly. I should have a weekly screenshot here, but I guess I actually messed it up. But either way, there's no annotate, even on the 4 hour, right? There's no annotations on the 4 hour. So if we look here, this is version 3. I have a lot of annotations on the 4 hour. Here, I have no annotations on the 4 hour. If you look at the hourly, there's no annotations on the hourly. If you look at the hourly here, there's a lot of annotations on the hourly. So I'm getting really precise and technical with what it is that I'm looking for and how I frame these ideas. You can see the difference between version 2 and version 3. So in this new version, version 3, I'm getting extremely technical and just actually using the concepts that I trade with on the higher time frame, carrying that analysis from the higher time frame down to the lower time frame, and actually being able to frame a solid approach for the day. So this is a change that I've been making recently, and it's only because I started studying the ICT lectures that it's been putting out. It's kind of revived my sense of smart money concepts, I guess you could say. And now I'm using them. I'm actually using them. I feel like I haven't actually been trading smart money concepts, kind of been doing my own thing, but now I'm reverting back to that. And it's working. I'm able to read price with a lot more clarity when I actually use these concepts and annotate them. So don't make the mistake of trying to do your own thing. Just stick to the fundamentals and do what you're taught, which is basically the lesson that I'm learning right here. I mean, you can see the clear difference, right? Look on the 15-minute here, look on the 15-minute here. The annotations are a lot different. Here, I'm not even annotating the liquidity. Here, I am annotating the liquidity. And liquidity is literally the basis for my entire trading model. And here, I'm not even annotating it. So what's going on there? So new way of doing things, which is why this is version 3. And if I showed you the difference between version 3 and version 1, it'd probably be night and day. But you can see how it's just like a continuous progression in my understanding of my model and how I read price and how I look at the market and how I arrive at higher time frame narrative and bias. And it only gets better over time. This is literally the first version. So the same kind of move, the same playbook in version 1 and version 3, but my understanding of it in version 3 is is advanced compared to that of version 1. So that's the difference. We're only getting better out here. That's it. It is persistent action on a day-to-day basis that is pushing me forward every single day. And I'm intentionally moving the needle every single day because I want to be great. If I want to be great, I have to put in the fucking work. So I'm going to be great to show you that you can be great as well. And this is possible so long as you put in the time and the effort and the energy. So watch me do it first and then believe that you can do it too, because there's nothing that separates me from you. There's absolutely nothing that separates me from you. Maybe if you don't work as hard as me, which how would you even know that? You don't even know how hard I work. I don't even know how hard you work. There's nothing that separates me from you. Nothing that makes me special from anybody else. Anybody can do this shit. I just have an extreme passion for this. I put my heart and soul in this. I love sitting here behind these screens and doing this kind of thing. This is where my heart is at. And so I just love doing it. So when I'm working, it doesn't even feel like I'm working. It feels like I'm realizing my dreams. Literally, that's it. And eventually we're going to get there. And eventually to the motherfucking top. That's it for this one. Talk to you tomorrow with the weekly review.